Good morning, all, and welcome to this morning's video. I hope you had a great weekend. I have just the one pair on watch this morning, and that is Euro Kiwi. So let's break that down for you now and give you my thought process, as always, and tell you what I will be looking for from this pair today. So on the daily chart, the narrative, as I see it, is as follows. So we have this high here. You can see that price tapped into this high and it sold off. It broke above, as we would normally expect, catching people the wrong side of the market. Okay. But the clue for me is that this wasn't ready. This wasn't going to be the big move that played out to the downside, is how price started. So as I've always said, those of us who trade the Falcon strategy look at the nature of price, so how price is moving versus whether it's just moved. And this is not a typical start to a longer term move. Okay, this is more in keeping with something that comes down, comes back up, and becomes more complex. This is normally in keeping with something which would be a middle section to push back up. But when I look at this, where is it pushing up to? So if this was a middle section to push back up, there's not really anything of any interest on the left that it kind of lines up with. Normally, if this was a 1, 2, 3, the third touch would line up with something of significance, and there isn't anything. So this just gives me a clue that this is becoming more complex when we sold off like that from what was previously an area of value. Okay, so we did sell off and it did become a bit more complex. And then after we had this high here, we come back up, scoot back up, break to the downside. Then we start to get a little bit of more interesting structure. So we have these highs here. Then we have this little area of consolidation. This would be better if it was more visible on the higher time frames. But you can see we have a sell-off here, and we have an exchange of liquidity. Now, the significance of this exchange of liquidity, although it's not overly visible on the daily chart, is that we sold off aggressively and smashed through this brick wall low here with a lot of aggression. Now, look at the sell-off, okay? So when we had this exchange of liquidity, there was a very, very aggressive sell-off, possibly the most aggressive sell-off within this whole piece of price action, okay? And the key thing as well is that we broke through that low without even stopping. That tells me that there's a lot of liquidity potentially sat here, okay? So when we come back up to this area, and we do so, look, how did we come back up to this area? We often know whether an area is of significance or not when we get these reversal structures. Okay, we get the 1, 2, 3. This is about as clear as it gets in terms of reversal structures. We have the 1, 2, 3. We have the corrective middle section down. Okay, so what did I just say a minute ago? When we get these kind of sell-offs like that, and it lines up with an area of significance, this is usually where the bigger moves to the downside occur. We usually come back up, okay, break the high. So we did kind of wick through this to some extent, but not by a significant amount. So we come back up, we do break above it, break through it, and then we see the aggressive run off to the downside, and we aggressively smash through this low, okay, here, which was holding all of this structure together. So how I'm seeing this at the minute, we do have these near misses up here, but because we have a crystal clear reversal structure here, followed by a very impulsive sell-off and a clear correction afterwards, which if we just measure the initial impulse and we assume that the continuation leg out of it is of a similar length, that would take us down to here, okay? And that would complete this impulse correction continuation, and if we measure it from the break as well, because the volume that's been built up within these corrections could often dictate how far we go, that would take us just below there. Well, that's an area of significance for me, because we have a very sharp move down followed by a sharp move up, which also happens to be the retest of the back end of all of this. So that's an area of significance as well. So it's no surprise to me that this impulse correction continuation, the continuation leg when we measure it, as I just did a minute ago, kind of lines up with there. So if we were to push down to there and respond, why would we do so? Well, what might happen, we might get something like this, and we may push down to there, then come back up and tap into this high, and then this would be by coincidence, a parallel piece of structure, and perhaps this is the middle section that we're trading within now for a push back up to there to tap into this high where, or maybe this high, because there was an aggressive sell-off here, as you can see, which smashed through that brick wall low. So maybe that's what price is doing at the minute, okay? Same thing again. This consolidation smashed through this brick wall low, and this whole consolidation smashed through that one. So maybe that's what's happening. So we don't need to be right in trading we don't need to know what's going to happen next in trading, rather, to know, to make money. We just have to be able to manage our risk. And these are just longer term theories, okay? So we have this, how was the weekly? Yeah. So we have this weekly close there. We had a bit of a stall in price. So this weekly candle alone tells me that we're consolidating and that we will likely come back up to fill this wick. So the next thing I ask myself is, do we have a reason to fill that wick? Well, yeah, because you can see we have a base now. We have the low. We come back down. We have a base from the low from the previous daily close. This is today's daily candle. So now that we've got a base, we do have a reason to fill that wick. Okay, and you can see that we're coming back up. We have that bullish wick there. Okay, so this is all quite simple, really. We have the area of value. You can see it there. If I just measure this, and we can see that that's also a bang on, not that we use Fibonacci retracements that much, but that would be bang on a 38.2% retracement. So that makes sense as well. So what I'll be looking for from this one, it's pretty simple, really. There's not much more to report on this one. I'll be looking for a tap into, we do kind of have this structure, and you could argue that it lines up with that, but I don't think that's of any significance, right? This area here, it's just a wick. If you look at this high here, it's just a wick, even on the 15 and the 5 minute, I believe. Yeah, it's just a wick. So that gives me a clue that that's just volatility when it's a wick on multiple time frames. We do have this consolidation here. Okay. But I'm not too concerned about that. It would be, what would that be? That would actually be almost a bang on a 50% retracement. So we could potentially go up to there. So we do have to factor that in. Okay. But I don't think that's when you zoom out and you see that this is a larger structure like that, it's not as if it was a sharp move like that, then I would believe that would be of significance, but that's just a bit of consolidation. So what I'll be looking for here is I don't really use trend lines because they just cause confusion. So I find that there's much more simplicity in just having the ray lines on your chart. So what I'll be looking for is price to tap into this area, a little push down, and on the 1 hour chart, and a 5 minute continuation as a minimum. And then I would look to get short on the break. If it happened to be a 15-minute continuation, then I would look for the same thing, but I'd also be filtering this on the 5 minute chart to see if I could get that risk entry within the flag. Okay. And as I've said, that's usually just the bigger players stacking their orders for the next wave to the downside. I would be mindful. I would be looking at this, and I would be paying attention to whether this kind of lined up with that. So I prefer it if we tapped above and then tap back down. If we literally only just tap it like that, then I'll assess it at the situation at the time. And if I think that needs a 15-minute continuation instead of a 5, then I will make that judgment call. That's why you can't do everything mechanically, because there's always price action is always unique. Okay, so you can have the best, tightest trading plan you like, but at the end of the day, every single trade is going to look slightly different. So there's always a judgment call to be made to some extent. What we could get here is you can see this structure forming. We may get something like this, okay, where we end up with a 3-touch structural approach leading up to that. If that was to happen, I would take a risk entry there because that would be very deliberate, in my opinion. We'd have a 3-touch leading up to that. But we shall see if that happens. I would prefer that. That would be more deliberate. but that obviously that would take a little bit longer to form. So we'll see what the market wants to do. We may not get any of these things, okay, but that is what I'm going to be looking for today. That is Euro Kiwi, and of course I have an alert set below the area of value, which just happens to be a sharp move as well, which tells me that that's where the liquidity is likely sat, where the stop orders and the sell orders are likely placed. So I hope you've enjoyed this video, folks. Just to touch on it as well before I forget, how I would manage this, because the range I would be let's just change that a second. That's I've got that set on the normal fib settings, so let's put it on take profit. There we go. So I would measure from there to the bottom of this range, and then I would set a take profit because of the, how aggressive the preceding impulse was. I would anticipate this smashing through this low here, and to give us that impulse correction continuation, and then I would set a take profit there. We would have about 6% to the lows, and there's about 18% there to that low there. I would set a take profit there while simultaneously trading my stop loss, and then if we just measured that, that would look how that lines up. Okay, so these things are not pie in the sky, plucked out of thin air things which I'm doing. They're mathematical. Okay, the patterns that we look for are mathematical. The 90% area is where price can pull back deep. Even if it does continue to the downside, it can pull back about 50% of the move. Okay, so you can see that lines up exactly bang on there. So it's not coincidental. Okay, these are all mathematical, psychological problems, patterns that we look for. Problems for some people, not for me. But anyway, that is what I'm going to be looking for today, and that I will see you again in the next video. I hope you've taken some value from this. Thanks for watching.